Welcome to another segment. Let's talk about the stock market and let's see how we can make money. So if you guys have been following me, I've been talking about S&P 500 and how it's on this downtrend break, and there's a possibility that we could get a breakout. And today my buy order has finally been hit, and I have my stop loss here, which is 398, and we'll see what happens here. But what I want to talk about is something that's been transpiring in this a little trend here. So we have an uptrend, okay, that's in a smaller time frame. But what I want to focus on is the fact that SPY consolidated, broke out, came back down, and now it's breaking out again. I like this area as an area of support, for SPY before it comes back down to 394. I think 394 is really risky, right? So if it comes back down, I want to see some buyers come back and push it back up. The key area I want to focus on is the volume or the participation. This is interesting. This is declining as we're getting a move upwards. This, I don't like that. When I see prices declining like this, that does not give me confidence in the stock, and that does not give me confidence in the move. But that's why the position I took it solely based on technicals, but I am cautious on it because I'm worried that the price may come back down because we're having declining volumes. But we'll have a look and we'll see how it goes. Overall, the S&P 500 is breaking out. It looks good. On the daily, we have a decent candlestick here. We did try to push off, as you guys can see. It did try to push down, and now we have a push up. And this rally came towards the end of the day. Now, if we look at the overall emphasis on the stock, this could now consolidate here for a little bit and then push up. That's ideally what you want to see, right? And we'll focus on that, and we'll see how this does. But this interesting part is, don't get attached to your position. I took a position. Now I have risk. My risk is managed, and I'm gonna move on from here. Okay. So looking at the triple Qs are still same thing, breaking out from this major downtrend. And if we look at a smaller time frame on the Qs, the volume is declining, right? However, there's an important thing to note as well. Over the past few days, there's been a lot more activity, a lot more buying activity as well. So I do expect a pullback to happen in the Qs, and we'll see if 285.86 holds. If 285 breaks, we can go possibly test 275. But I have these levels as support levels where we can see if buyers are for real, and if price comes back down to this, they should actually be buying more. So now on the daily side, on a technical side, this is a big break. So we can see this little trend line was tested multiple times. 1, 2, 3. This one came close, but this is the fourth one, and it's breaking out. Usually when this happens, when there's multiple tests, it does signal a reversal, but we still have to remain cautious because the market is very, very, at risk right now. There's a lot of different things happening. There's a lot of moving parts. We are having the Fed is going to come up and talk about the interest rates in the coming weeks. So we have to be careful there. The other interesting thing to note is the index, the yields have gone up with the market. That should not happen. Okay, so overall, the Qs look bullish right now. If you take a trade on this, take it safe, as the volume is very, very interesting, and it could push up higher, or this could be just a complete fake out if we reject 300 level. 300 is a big psychological for the Qs that is coming up. Now, looking at IWM is leading, but it's interesting here. On the IWM, it did reject this level again, which is 189. However, it is above this trend line, this line right here, which is 187. So this area I have marked because I see multiple sell-offs that are happening here. Now we see another breakdown that happened exactly at 189. Now what I want to see is on IWM is for it to push higher from here. If it breaks 189, I think IWM could go 192 to all the way down to 196. It could be a quick move to the upside and even test 202. So IWM does look like it's gonna be a strong move very, very soon, but we'll have to be patient and let it play out. Overall, the gold play that I have today, is still holding up. There's nothing wrong with it. I've entered a while ago. It's just holding up consolidation in this position, and that's what you want to see. You want to see a breakout, price reach a critical level, which is 180, which it could not hold. Now it's coming back down to retest, consolidate, and that's exactly what we want to see before we get the next move higher here, right? And that plays out. We want to see if bulls are for real when it comes down to this level and starts consolidating. If they are, it should push up higher. Okay, so overall the market is fairly decent, and if we look at the VIX is starting to fall and creep below this level at 1890, and like I said, I want to see it fall below this and go all the way down to 1480. That would be very, very nice to see. That would indicate, you know, we are going to have some sort of reversal. And my big philosophy is when every single sector is green, do not get caught up in the hopefulness of it. I don't like this. But when every single sector is green, there's something wrong. Every single sector should not be green. Every single sectors shouldn't move together. It should be rotations happening. The fact that every single sector is green is worrisome, and that's something that you guys want to keep in mind. And I've been saying that over my past couple of videos here. And if we look at this chart, this is what I've compiled. These are all the sectors, all right? So, and if we look at a year to date, year to date, what do we have leading the market in January is we have jets, we have semiconductor, XME, oil and gas, communications, tech, right? That is leading the market. And what's lagging? Utilities, consumer sector, industrial, commodities, and gold, right? So this is a pretty decent idea that this is how it should be going if we're going to get to the upside, except XOP should be down here. But this is all right. This is not bad, what it's telling us. But if we look at the 6-month trend now, we have silver and precious metals on the rise, and gold as well. So look at that, right? Exception of jets, right? We have oil and gas, gold. These are all defensive. Okay, and we got financials rallying as well, so that's interesting to watch what the trend is doing, right? And then if we do 1 year, we are having a rally from the bottom here to the upside, but they're still telling us that the biggest leaders right now to this day are oil and gas and precious metals, right? So those are defensive side. So I'd be careful right now if I'm thinking about going very, very long in this market. Okay, so I hope you guys like this segment. I'll see you guys tomorrow. If you guys did, please like and subscribe to the channel.